So oftentimes when they're down here, we're going to have some stuff that's duplicated. So I don't know why they do that. They put it in kind of in both places. And anytime you have something dealing with debits and credits, QuickBooks typically puts it down here. They're thinking of the accounting department and bookkeeper of working with reports, forms on an accounting equation basis, assets equal liabilities plus equity, as opposed to a debit and credit basis. That's why they put these here. So we have lists. I'll go through these quickly. We're running along here. We got the recent automatic transactions. So if you have automatic transactions, meaning they're happening automatically, you've timed them, they'll be here. The balance sheet, this is repeated, of course. A comparative balance sheet, this is repeated. Statement of cash flows, we already saw that one. General ledger. Now this report, the GL, is the standard report that we kind of think of as the transaction detail, breaking out all the information. Let's bring this to the prior year, 01/01/24, 12/31/25. Breaks out all the information, giving us the detail in the report. And so it's like a transaction detail report. And notice you would think it would give us the debits and credits, but it's still kind of reporting it in a plus and minus format. So this, in essence, like here's the checking account, here's the savings, it's the balance sheet on top of the income statement, giving us the detail of the report, which most people are probably these days going to go into the balance sheet and just drill down on each line item, getting the transaction report, right? Which is basically kind of like a general ledger. It used to be when you did taxes or auditing, sometimes you had to give them this giant report because you couldn't give them access to the accounting software so that they can drill down on the detail. But these days, you can give them access to the accounting software, which means they possibly are not going to go to the GL as often, but rather drill down on the financial statements or trial balance report. Closing this back out, first tab, the journal report. We took a look about this briefly before when we looked at the journal form. This is going to give us all of the transactions in journal entry form. Let's do it for last year or something. Last year, what did I do? I'm getting tired. Why can't I find, there it is, last fiscal year. So now it's given us all of the forms. So notice it's not just giving us the journal form. In other words, you might think this report would just give us the transactions we entered with a journal, but no, it's giving us all the transactions because all transactions are all forms except for a few of them, like an estimate and a purchase order, which don't affect the income statement. All other forms have a journal entry related to them, and therefore you can see them in terms of journal entries. So this is a great report to be able to look at the forms and think about debits and credits, which will help you to think about what debits and credits are doing in that format. It gives us more detail on things on like invoices, for example. It gives us the detail of the transaction, which is useful because an invoice, for example, doesn't give us all the information about like the inventory side of the transaction and so on and so forth. You also might use a report like this to try to do your billing process. How? Because if you're billing as an accountant, you might say, I'm going to charge you by hour, but you might also say, look, what I'm going to do is I'm going to count all of the number of transactions that I have done. And if you're in these ranges of transactions, that's what I'm going to base my rate on. Now, you might go more detailed than that and say, hey, look, because the problem with that by transaction is that some transactions like this invoice is a lot more detailed than a transaction that you build on like a gig worker where you just enter a deposit. So you might say this transaction should be worth more. So maybe you make your billing based on the number of accounts impacted in a month. And you can count up the number of counts. How would you do that? Well, am I going to run this report every month and count the transactions? Well, all the line items? You could. But you can also export it to Excel and sort it so that and then you can use Excel to count it. And that way you can make your billing system not just based on somewhat arbitrary hours, which can change based on your mood and who's doing the work, but based on more concrete transactions, which you can then provide evidence for. So I think that's useful. So recurring template list, a list of templates that you can have. Profit and loss, we've already seen it. Profit and loss comparison, recent transactions. So that'll give you, if you're reviewing someone's work and stuff like that, that's what you've entered recently. Reconciliation reports. Now this is like a bank reconciliation is the most common reconciliation. And generally you're going to go into the banking information and find this information there. That's not, it's not exactly a report. It's more like an internal control for the bank account. It's really important, but you're not really constructing the reconciliation report as you do the data input as with other reports, but instead you are comparing what we did to what the bank has done, and that comparison is the reconciliation. So it's kind of a different thing. We'll talk more about that in a future course or section. Trial balance. This is a really underappreciated report in the bookkeeping world. In textbook world, it's really important. So it goes from 01, 01, 24, 12, 31, 25. This basically has the balance sheet on top of the income statement in one report. So for me, I often use this report to have open instead of both the balance sheet and the income statement. Look how long this is because of the subledgers, how long this report is, and then this report, right? If I just want to look at something nice and quick, and see the transactions as I record them. I record the transactions in the first tab. I want to see the impact on the financial statement. I often prefer a trial balance report because look how tight it is. I've got the whole balance sheet, assets down here to right here. This is, and then to assets, then liabilities start here, boom, boom, liability, 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 and then the equity section, and then the income statement. That's the whole, and I can make this for 2024. Let's go to 12/31/24. And so there we go. So now we have all of 2024. So it's still a little bit longer, right? It's not that short because the income statement is still pretty long, but it's a lot more tight and consistent a form. So the general idea would be, from an accounting standpoint, debits and credits are a more efficient way to look at things typically than the double entry accounting system. And therefore the trial balance is a cleaner, more efficient way to kind of organize all of the accounts and see that the double entry accounting system is in balance with the balance of the two columns. But you have to learn debits and credits in order to read it that way. And therefore for external reportings, typically we think of taking the trial balance and constructing the financial statements. So note, from a bookkeeping standpoint, what we normally do is do data input, look at the end result of the financial statements, drill down to the source document to see how they were built, to the transaction report, which is like a general ledger, and then into the detail. From a textbook problem, going from the bottom up to the construction, we normally think of it as how is this thing being built? You normally enter the forms, which are basically journal entries. The journal entries are used to construct the general ledger, as we saw the general ledger report. And then the general ledger is used to construct a trial balance. And then the trial balance is used to construct the major financial statements, balance sheet and income statement. And then the balance sheet and income statement could be used to construct the statement of cash flows. That's kind of like, and so this is like the step before if you did it in order, building from bottom up, the step before. So it's a little bit cleaner. Okay. So you might, even if you don't know debits and credits, you might use this report as like your nice quick 1-tab instead of 2-tab report to see the impact of transactions. All right, let's go to the first tab, and that's the trial balance. Where was I? Profit tag, trial balance. So transaction detail by account, that gives you the detail by account. The transaction list by date is the one I want to look at here, because this is a great tool to kind of review recent types of transactions. So let's do a custom date. Let's just make it from 01/01/24, 12/31/24. So this is going to give us all of the transactions, but instead of breaking them out by account like the general ledger does, it gives us all transactions in order by date, gives us the type of transaction and the name. Now notice it doesn't give us the detail because it's trying to put them in one line item. But it does give you the split account. So if there's only one other account affected, like you made a deposit and you recorded the other side to revenue, then it'll show the other account here. So it'll be a deposit form, increase in the checking account, and the other side will go to revenue. But if there's multiple accounts affected, like with an invoice selling inventory and having sales tax, the other account is going to be split. So one way you might use this report is, again, on your billing cycle. You might say, hey, look, what I'm going to do is I'm going to charge people not hourly, but by transaction, the number of transactions. Now, this isn't as detailed because, like I say, some transactions like payroll are more complex than others, which you might want to bill more for, which you would have to count the number of accounts impacted, such as being done with the journal report. But if you just want to do it more simple, you can do it by transactions, even though some are more complex than others, and say, I'm just going to bill by how many transactions. This is my rate in this range of transactions. And that's a little bit easier to count because I can just export this to Excel, and then I can just count the number of columns in Excel using an count function, which will be easy to verify and, again, easy to then explain to a customer. How are you billing me? Well, these are the transactions I entered. Here it is in Excel. Here's the number of transactions. Here's my billing rates for that number of transactions, right? So that's one way you might think about setting that up. It's also great to review what someone else has done and so on in this type of report. All right. And then you've got the transaction list with splits. Now you would think I wish this was by date and then it gave the splits, but it doesn't. It's by account, I believe. So you can't really get the detail like you kind of would like to get. I wish they had the transaction list by date with splits, meaning showing more than one account impacted so I can count the number of accounts. Now this is more payroll information, which again would only be used if you are having payroll and you use the payroll within QuickBooks. All right, that's the general summary.